Welcome to Trading Nation. I'm Brian Sullivan, and joining us now is Rob Sluymer. He is the new Managing Director for Technical Strategy at Fundstrat Global Advisors. Rob, good to see you again. Thanks very much for joining us on Trading Nation. How much downside do you think this, because I know you're a little negative in the short term, how much more downside do you see for this market?
Yeah, great question, Brian. Look, the market has already pulled back to its 50-day moving average today. That's kind of a cliche support level where we'd expect to see a bit of a bounce. But I think if it works its way back up to that 2365, 2375, you're really back into all that overhead resistance. And I think it works its way down to 2275, 2250. That's right around the 100-day. And worst case scenario here, Brian, I think it could possibly get down to the 200-day. That's roughly around 2200. That's another 5% from here. But I don't think it's reason enough to get negative long term. I think what's happening is you're setting up for some very good buying opportunities as you move into the second quarter.
Yeah, so if we get this drop that you are calling for, that is, hey, have some powder dry, because that's going to just give you a 5% discount in a still uptrending market.
Yeah, I think that's exactly it. And I think the really key point here is that most stocks have been correcting since the middle of December. If you think about where the yield curve peaked, where the break-evens, where oil, where the relative performance of the Russell 2000 peaked, that was already 3 months ago. So most stocks have already had a pretty significant consolidation or pullback. I think, again, as we move into earnings, a lot of that overbought condition that developed going into the end of the year will be unwound, and there's going to be another buying opportunity.
You know, if you look at a longer-term chart of the market, we ascribe a lot of stuff to Trump, and that's part of it, I'm sure, but we had like 6 or 7 years of a bull market following the financial collapse. Market basically took a year-long vacation for the campaign. Is this just a really longer-term uptrend that the market is resuming getting into?
Yeah, it's a great point. You know, back at the beginning of last year, we'd highlighted that the 200-week moving average, that long-term support level, should act as a major support level for the market, which turned out fairly well. The market's up 30%, 15% of which has come since the election. But I'd point out that a lot of the cyclical leadership, the reflation trade, actually began back at the beginning of last year. It didn't just start in November. So those themes continue, and they're already correcting. So again, I think as we move back into earnings seasons, there's going to be a much better opportunity to be looking at some stocks, and that's only a few weeks away.
So headline would be short-term a little concern, long-term more optimistic. Any drop would be a buying up.
That's correct.
Rob Sluymer, Fundstrat Global Advisors. Rob, a pleasure. Good to see you again.
Thanks,
for joining us. Thank you. Folks, thank you for watching Trading Nation. I'm Brian Sullivan, and we will see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.